Hi, welcome to another video. This video is on the last in first out method, or we call this one LIFO. It's similar to what we previously went over, the first in first out method, except that the concept is that we're not selling the items that we first bought, we're selling the items that we bought last. And so that just means that instead of looking from the top down as we're calculating our inventory and looking at the values, we're actually going to flip it and do everything opposite of what we did for FIFO. So this video is going to be a little quicker than the FIFO method. But like I said, if you grasp the FIFO method, you should understand this one as well, but just that it's the flip. Okay, so let's start with the perpetual again. What we have here is the same information, the same ending units, didn't change, and we're just going to work through this method. So let's put our layers down again, and we're starting with our July 1st opening balance layer of 500 units, $10, the value being $5,000. The next thing we record is our purchase of 70 units, $12. And if we multiply that as well, we get that 840. So let's calculate our balance, because this is the end of a transaction, and our balance is equals the sum here, that, and adding these two together, getting 570 at 5840. Next, we have that we're recording a sale. Perfect. So July 5th is now the sale, and we're selling $250 worth of goods. So remember, underneath the FIFO method, we would have taken the $250 from the 500 units. 250 units from the 500 units. 500 units is at the top, and that's why we did that. LIFO, last in, means we start from the $70 and move backwards. So that means the first 70 of the 250 units came from this layer here, the second layer, the last layer at the time, which was $12. And so let's calculate that. Value is 840. We have 250 and we got 70 already, so we need a remaining 180, which the only other layer left, because this layer is complete, is from this 500. And so that means we take 180 from the 500, which is valued at $10, and we calculate that 1800. So that's 250. Total of these two is 250, and this is the value of the 250 that was sold. And so what we can do here is add everything up. Add everything up to get our remaining balance. So our remaining balance after the sale is, we have 320 left at $3,200. Moving on the 6th, July 6th, we had another purchase. Oops, change that format there. Need as much space as I can get. July 6th, we purchased another 50 at $10.50, and so the balance is 525. Well, the value is 525. The balance, which is the sum of the two, is 370. So following the purchase, that's how much was left, 370, and that's the value that we have attached to 370 that's left. 6 is completed. Now we're going on to the 16th, July 16th, and on July 16th we purchased another 100, and we purchased it at $14. So the value, that's my value, multiplying the units by the dollar value, and now the sum of everything that happened, or the balance that should be left over from the 16th, is 470 in units and 5,125 in value. Next, we have on the 30th is where we have the sale. And like I said, with FIFO, this is just like FIFO, LIFO, the sales are the most complicated part because you have to make sure you're taking from the proper layers. So it says that we sold 375 units, and so we have to get those 375 from somewhere. Underneath the LIFO method, we would have gone from the top and come down. The FIFO method, we would have gone from the top, come down. So now we actually have to go from the bottom, go back up. And what happens is we have to look at the very last purchase made before the sale and move back. So we wouldn't start here and move back. Or we wouldn't start up here and move back. We would start the closest purchase, and we would start with this 100. And so, of course, 100, we have to use up the entire 100 to get 375. So $114. And so that means of the 375, we use up 100 already, so we need 275 more. The next layer is only 50, so that means we're going to use up that entire 50 layer. So 50 at 10.5. Calculate that. So we got another 50. Then we have 225 that's left over. The next layer is 70. Now what happens at this 70 is we would see from this sale here that 70 was already used. So there's no more that 70 layer to be used. So what happens is we move up to the next layer, this 500. This 500 actually has, let's see how much left. 500 minus, we used 180 of that 500. And so it has 320 left of it. We only need 225. And so therefore, minus 225 at $10 to get the value, what's left to value for the sale. And so the three of these come back to 375, and that 375 came from three different layers. This layer here on the 16th, this layer on the 6th, and partially from this layer on the 1st, only because this layer was the 70 layer was already used in a previous on the 5th. Okay, and tell me highlight these again, and calculate equals, and you should remember, just like with FIFO, this should actually total back to our 95. Perfect. And then this is going to give us a balance of $950 is what we have left on the periodic method. Okay, so our inventory at the time is going to be equal to $950. And just as we did with FIFO, the sum of all of our costs related to the sales is what is going to be our cost of goods sold. So the sum of that, and that gives me, I'm supposed to do it as a negative, $6,815 is our cost of goods sold on the perpetual method, last in first out. So again, it comes back to our $95 that's left. Only thing is, as we are calculating our balance after every time, when we come up to a sale, our sale needs to go from the last cost, 12, to 10. In this instance, it was 14 to 10.5 to 10 because, like I said, this is already completely used up. And that's how we got it. Ending inventory equals to the ending value we calculated. Cost of goods sold being the total of all of the costs we recorded as a result of the sales, because those cost of goods sold, they work together with sales. Okay, and that is the perpetual method, last in, first out.